Hey everyone, welcome to another episode of the Winners Ways podcast. This is where we talk about everything personal finance. We talk about career, and of course, we give you life motivation to help you to excel. Today on the show, we have a special guest. We have Rubin, who is a wealth manager, and we are going to be talking, speaking, and listening to Aaron as he takes us through wealth management, tax planning, financial planning, investing. I know you guys will benefit from this episode because Aaron has wealth of information that he's going to be sharing with you. Hey, Aaron, welcome to the show.
Fantastic to be here. Thanks for the invite.
Great, great, great. So can you please introduce yourself to my audience? Let them get to know you, what you do, so that, they'll know who I'm talking to today.
Yeah, absolutely. So Aaron Rubin, and I'm a CPA, and I'm an attorney in California, not practicing, and a certified financial planner. And my business helps people think through those decisions that they need to make so that they can eventually, retire and be secure in what it is that they're doing. And so we focus primarily on the financial planning side of things. So, plan always comes first, and then everything else needs to fit around it. So again, you can't start investing unless you know where you're going. And so that's a big thing that we do is try to figure out, do you have kids? Do you, are you taking care of your parents? What are you trying to do? Do you want to move to Nicaragua and retire? All those things kind of factor in. And once you have that, you can actually turn around and start making some real impact on, someone's confidence in how they retire and how they think about their finances.
Perfect. So I'm very passionate about, financial planning. I try to educate my audience on how to, do all these things. I'm not a CPA in any way, but I just share my knowledge with people. So I want to ask you, when you talk about financial planning, what I know is that, when you work, or if you own a business, certain part of your income should go towards retirement. But I know that there are other aspects. You talk about estate planning. Maybe if you have kids, you are going to think about college. If you have home, you talk about mortgage. Some people may have student loan. So I want you to break it down for us when we talk about financial planning. If someone comes to you today, what will you tell them to do in terms of financial planning? Maybe some kind of overview so that, my audience will understand financial planning.
Yeah, for me, financial planning or goal planning has four aspects to it. The first aspect is the actual financial planning piece of it. Some of that's budgeting. It's I shouldn't say it's amazing to me, but a lot of people have never done a budget in their lives. They have no idea what they're spending, and it's hard to change your habits if you don't know what your habits are. And so that's sort of again, one of the things we first work on is saying, okay, what are you saving at this point? What does that look like? Is it enough with what you're doing? Can we change habits in there? And again, the only way you change the habits is knowing what there already are. The other part, the financial planning piece for us is the tax piece. You can't form a plan. I mean, and just say, well, I make $200,000 a year. That's great. Maybe, a lot of it's going to the government. And how much is it? And can we make that less? And if we make it less, can we have a bigger impact? Can we retire sooner? And then the third piece is the estate planning side. So, although I am an attorney, I don't prepare estate documents. We work with estate planning attorneys who specialize in that sort of thing. But it's super important. And it's what is amazing to me is how many people don't have any documents at all. And I tell everyone who I meet, hey, but if you don't have a will or a trust or powers of attorney, don't talk to me. You need to go talk to an estate plan attorney today. That's the most important thing. And I've had clients walk in my office and they have $10 million in assets and they have 2 kids, all, minor young kids, no will, no trust. And it blows my mind. So again, the estate planning piece, we talk a lot about that because it's super important. And with all the new laws that are constantly coming down, Secure Act 2.0, it changes the rules of the game every so often, and you have to be aware of those rule changes, or else you're going to make a mistake. So again, we talk a lot about estate planning. And then the other part of that is the investment planning. What are you doing with your assets? You've worked hard, you've earned it. What are you doing with those? How are they working for you? Is there a better way to do it than what you're currently doing? And to me, that is financial planning. That's, and it's kind of funny. So we call ourselves a wealth management firm. The problem is wealth management means so many different things to so many different people. And I've talked with insurance agents who just sell insurance and they call themselves wealth managers. And I'm thinking, well, you don't talk about anything else except insurance. How can you possibly be a wealth manager? But, for us, it's that holistic view of things. It's being the personal CFO, for our clients and giving them their options and telling them, this is the direction you're heading. If you want to change it, you're going to have to do something. And that's really core to what we do.
Oh, wow. That is packed. You just broke it down. You spoke about spending, about taxes, and investing. So that's very important. You mentioned Secure Act 2.0, and I know many people may not know this. These are government policies that will help people with their retirement, I think. So all this information, I think they are core and people need to know this. So now, let's say there's someone out there that is hearing us. Because for me, everything about this interview is going to be, how can my audience connect with you and learn from you? If they need your service today, where do they need to go? Is it just get on your website? Will they be able to establish connection, just going to your website? Will they, find out more about you?
Yeah, website's always great. We have a feature in there where if you want to schedule time to meet with us, you can put it right on our calendar. We're on Twitter and Facebook, so if you can probably message us there. And our website has my phone number on it, so you're welcome to give me a call.
Okay. No, so since you spoke about investing, I want to hear from you. What has been the best investment decision that you've maybe made personally, or you've seen someone else made? Because sometimes I hear people, oh, hey, if you had invested $1,000 in Amazon in 1990, by now you will have $1 million, or whether Tesla, all those. Sometimes you don't know what you missed. So what's the best investment decision that you've made?
That I've made. That's a good question. So, I think the first thing to just sort of note is that everybody likes to talk about their winners. Nobody likes to talk about their losers. That's so, right. I've had both, and I tell people, about it too. So again, I don't want someone to listen to this podcast and think, oh, Aaron Rubin, only picks winners. No, that's not how it works. I think so far, I think there've been like a couple things. One, I am a investment guy, right? In different people. And my investment, I mean stock market guy. I'm very comfortable with the market, and I haven't done a lot in real estate, although I just started recently. And so far, the real estate thing has gone pretty well. My wife and I bought a house that was, I thought, obnoxiously priced, but it's the Bay Area, and it's up an ungodly sum in 3 years, and we can't believe it. So that turned out to be a good decision. And then we bought a house in Texas less than a year ago, and then we bought another one 3 months ago. And the first one we bought, we actually got it for around list price, which is as of right now unheard of. And we have a renter in it, and it's gone really, really well. We're getting our rent, it's up like 30%. since we bought it. So it's been a wild ride for on the real estate side, which is funny because I don't consider myself a real estate person. So, I'll say the serendipity of real estate investing has probably been the best for me.
You know what? As you mentioned, the real estate investment, I'm in Texas, by the way, and people down here in Texas, we are complaining about people from California coming here to buy properties. And right now, property value is every year is going up by maybe 10 to 15%. So it's crazy right now. You talked about list price. Sometimes people, they offer extra, in order to get the house. So it's really
well,
crazy.
Yeah, and I'm going to be perfectly honest with you because I like being honest about decisions that I make for the second house. We went like 50,000 above list price because I'm now, of course, we did the analysis beforehand and we said, okay, our expected rent was X. We're making sure that we have the right return that we need on the property, and it all penciled out still, but nevertheless, trying to deal with that, it's crazy. It's crazy.
No,
and in California, we just got, I'm sure all your listeners get this in the mail too. They send out these little postcards to tell you, oh, this house sold for this much, this house sold for this much.
Yeah.
And we got that in the mail, my wife and I, for our personal residence, and every single home that we saw went for at least 120,000 above the list price. It's out of control. Well, I'm very curious to see how the rising interest rate environment is going to impact all that. We'll see. I mean, there's so much cash floating around that it may not be as impacted as we think. And the major issue is going to be people who need, FHA loans, or again, it's hard to bid. It's hard to win houses when you're doing loans. So every single time that we've purchased a house, we've done it in cash, and we've had to quickly turn around and refi it because we couldn't win the bids otherwise.
Yeah, it's crazy right now. You just talked about the interest rates. I know the Fed, they are increasing the interest rates. The stock markets today, I don't know if you looked at it, it's went down by a lot today. So I think there's G3 in the market. The real estates will tame down a little bit, I hope, because it shouldn't just keep going higher and high now. Anyway.
I think my hope is that the banks have done better jobs underwriting nowadays, so that we don't have that bubble burst like we saw in 2008. I'm crossing my fingers on that one, because I don't want another 2008. That was terrible.
I don't want it either. I totally agree with you. So, wow. No, so I like that. So when it comes to financial planning, I know you published a book titled Financial Adulting, which is a guide to help young professionals navigate tax, investment, and estate planning. Can you just give us maybe just a little glimpse of that book? What is the takeaway of your book?
Yeah, it's a great question. So I'll start with why I wrote the book. So I wrote the book because I had a conversation with a friend of mine who, and this is actually tell the story in the book, but I had a conversation with a friend of mine who was telling me about this fantastic insurance policy he got, and, I was like, well, tell me a little bit about it. And, oh gosh, it's, I get this, the death benefit is, was it $500,000, whatever it is. And the best part is, when I go to retire, it's going to give me a cash flow stream. And I looked at him and I said, you bought an annuity? And he said, no, I didn't buy an annuity. I bought life insurance with income replacement. And I thought, oh my gosh, and I don't want to dog on annuities too bad. It's not my thing. Sometimes it's appropriate. A lot of times it isn't. And certainly, it's, talk to your own financial advisor. But I realized that in this guy, first of all, he was a smart guy. He is a smart guy, and his wife also very smart. And I thought, if these people are sort of struggling with some of the financial concepts, there's probably a lot more out there that need that help. And so that's when I started writing the book. So the book kind of takes you through the process of how to think about some of the issues that as a young professional you need to worry about. So we talked about budgeting. That's the very first chapter. That's to me, like you can't do any financial planning without budgeting. So we talk a lot about budgeting in that first chapter, and then we start talking about a little bit on the investing side. We talk about real estate. We talk about kids. How do you, not just saving for your kids, which is important, but how do you talk to your kids about money, and how do you get them into good habits? And so the book is sort of a reference guide with a lot of personal stories weaved through it. What I really like about the book is that at the end of every chapter, I list out the 5 main bullet points, the 5 big things. If you're not going to read the chapter, that's okay, but I want you to get these 5 things. And so it's one of the, so if you just want to thumb through it and get some concepts, great. If you want to read the whole thing, that's even better. But again, the book is really meant to, in the very last chapter is on charity and philanthropy.
Oh, wow.
It sort of goes from nuts and bolts of how to really start budgeting to all the way to, complex, philanthropic vehicles.
I like, the concept of, giving back. To me, that's also important. As much as we want to make, for me, it's not just about accumulating wealth. We must also learn how to give back, just to the needy in the society. So that's a good one. Now, there are various financial advisors, financial planners out there. Some will say don't invest in a single stock, right? Many people are now recommending mutual funds and ETFs. So what's your take on that when it comes to investment? Do you also advise people not to go into single stocks, or you do a mix of both?
Yeah, you know what? Every situation calls for a different solution. So for me, if it's a qualified account, an IRA, a Roth, you're almost always better off going with a mutual fund or an ETF. Just because it's much more efficient to do it that way, especially if it involves small stocks, because trading small stocks by yourself, they're thinly traded. There's lots of bid-ask spread, and it gets complicated quickly. But the mutual funds, because they do it in such bulk, and they have professional traders, usually, in a qualified account, you go with the mutual funds. If you're talking about a taxable account, trust, individual, nest egg type of accounts, you can go either way. I mean, I very rarely put clients nowadays into mutual fund accounts. 10 years ago, 5 years ago, I was probably using it a little bit more. The mutual funds. There are so many great ETF choices out there right now, and ETFs are so much more tax efficient that it makes sense to use your ETFs. You can find they're all under the sun. We tend to go with either DFA, Dimensional Fund Advisors. They just started their ETF lineup just like a year ago, or Avantis Funds, who was started by the former CEO of DFA, and they started right before the pandemic, which was really interesting. But you just have to make sure that whatever you are trading in, that it's not so thinly traded that you're going to cause a bid-ask problem. So if it's a small enough ETF, you don't want to trade the first 15 minutes or last 15 minutes of the trading day, because that's when everyone's unwinding their positions. If it's big enough, it doesn't matter. But if it's small, you don't want to start messing with that. And then, of course, there's active ETFs and passive. We're more of the passive or some screens on them. But for the most part, if you have a larger account, and I'm thinking, probably $1 million plus, in a taxable situation, you're better off using individual stocks to build your own index to many respects. So we partner with a group that helps us with that. They're called Parametric. They're pretty big, in our industry. But you can actually go to places like Wealthfront and do somewhat similar things. And what Parametric and kind of that ilk does is you tell them what index you're trying to trade to, or you're trying to mimic. And they'll build essentially an individual stock portfolio that has as little tracking error as possible to that index. Now, the great thing about doing that is that you're going to get hopefully around the index performance, but because you do have individual stocks, you have more tax wiggle room. So if you even if a stock market's going up, if you go from like 2009 all the way to the end of 2019, the stock market was just on fire for most of the time. There's a couple hiccups here and there, but for the most of the time, it was one of the biggest bull markets in the history of the world. Even during that time, there were losers. And so, what you get to do with individual stocks, if you're building a portfolio that is passive in nature, you get to sell those losers as they lose, replace them with stocks that give you similar exposure, but you get to take those capital losses and you get to offset them against other capital gains. So if, let's say you're in a 1031 exchange, you get a bunch of boot, it's going to end up being capital gain. You can use some of those capital losses for that. Let's say you're working at a high tech company and you have incentive stock options you've held on to for over a year, 2 years from grant date. You can use those capital losses in that portfolio to offset the gains. So you end up getting what we call in the industry tax alpha. And tax alpha is the additional benefit you get from a coherent tax strategy. And our hope is that over long period of over 10 years, you're going to get between 1% and 2% additional alpha from a tax strategy. So that's a long-winded way to answer your question, and that is to say, qualified accounts, mutual funds are great. Taxable accounts, you should at least be using ETFs. If you can swing it, do the individual stocks and bring some tax benefit to yourself.
Wow, that's deep. There are a lot of information that you packed in there. I follow the stock market. I try myself, to manage my accounts. But I know there are quite a number of people that are, they are novice. They don't know much about what we are talking about here. So for people like that, do you help them, in terms of setting up their accounts? Or you only deal with B2B kind of corporation?
Yeah, so we work exclusively with individuals. So people who, again, a lot of our clients, because we're in Silicon Valley, they're Silicon Valley people and they have the stock option thing. We help them. But again, we work primarily with individuals. Occasionally we'll get a corporation, but very rarely. But again, it's one of those things that even if someone, like me isn't a good fit, I know like Wealthfront has an offering where they will trade the individual stocks. And I think the minimum they have is $500,000. That's my recollection. Okay. And I'm sure if Wealthfront has it, Betterment has it too. So again, there's lots of opportunity there. And even if you're not as experienced in it, but you have the $500,000, for Wealthfront, go ahead and use them. You just got to be careful because Wealthfront does have other offerings. They'll do tax loss harvesting on their mutual fund accounts or their ETF accounts. That's not what you want. You want individual stocks.
Okay. So good. So people that maybe they have assets maybe in the 100K or to 250K, you guys don't deal with those people?
Yeah, typically not. We're our average client size is about 2 million.
2 million.
A lot of that is we have a lot of pre-IPO people. They don't have very much with us, and then we have some that have 20, 30 million. So it's one of those things. They average out to about 2.
Okay. Now, speaking of pre-IPO, so I know there are some entrepreneurs that listen to my show, business owners, maybe they may be considering taking their companies public. How does that process work with you?
So we, again, because we work with individuals, if an executive, whether in the C-suite or not, they're sitting on shares, and maybe they're exercise shares, maybe they're not. Maybe they're looking for some liquidity, on a pre-IPO stock. That's some of the things that we help people with. So again, if you could have been working at your company for 7 years and you've earned a good salary, but it hasn't been, you're waiting for the IPO. And, and a lot of companies today are waiting longer and longer for that IPO to happen. So you can be getting antsy pretty quick. So again, we can find people, whether it's the secondary market, so people who will do the private transaction, as well as people who will lend on your pre-IPO stock. So it's, again, there's no shortage of creativity when it comes to capitalism. So I love it.
Okay, good. It's one of the questions that I typically ask people, on my show is, why do you do what you do? And I know most of the time, maybe we do all these things for the money we make. Some people may be, hey, this is my passion. Some may be, hey, I learned this and I just want to share with other people. So if you don't mind, Aaron, why do you do wealth management?
Sure. So, well, first I'll say this: my passion project was the book. Like that was something that was really important to me. And not that my career isn't important to me, but for me, I spent 3 years in public accounting, and I also I never went into law, but I knew lots of people who went into law. And what happens when you do that is you sort of sell your soul, because that's the way, because you're working insane hours. I could tell you stories from my public accounting days that would shock you what happened. But I think in that accounting career, or even before then, as I was a young attorney, I saw people ahead of me and they were working just insane hours, and they got paid good money. But I thought it's not for me. I want, I have 3 daughters, and they're all, let's see, they're still under 12 right now. One's about to be 12, but they're, I think, right now, like I don't have like that tax busy season anymore, or seasons. If you're if you're at any sizable accounting firm, September, October is just horrible. So, I don't have that. So, I have 2 kids that are born in March. So I can actually attend the birthdays. I have a lot more flexibility. And part of that is, being a self-employed person, that I can do that sort of thing, as a self-employed person, though, I seldom give myself a day off. But when I need to, I can. And I didn't like the fact that in public accounting, it was just, there was probably 3 to 4 months out of the year where you didn't see your family. And it's because you'd wake up at, 5, whatever, get to work, and then you wouldn't be home till, 8 o'clock. And it's really, I don't know, it wasn't the way I wanted to live.
Yeah. That's something else. So, as we are coming to the end of this interview, I want to ask you, if you can change anything in the world, what would it be?
Anything in the world? Oh my gosh. Oh gosh. Let's see. I'm not going to go into American politics, because that's just it's too messy. Too messy. I am. I'm actually a really passionate person about individual freedom. So on my personal Facebook page and on my company Facebook page, while the Olympics were happening in China, every day I posted I was at 17 days, whatever it was, I posted some story about just the horrors that the Chinese government have perpetrated on its people, on other people. And so if there's one thing I could change, it'd be getting rid of the Chinese Communist Party, because I hate the fact that they're holding 1.4 billion people hostage. It's not right.
Totally, I agree. So what we can do, we make our impact. Those things we can change, we do our best to change them. Heron, it's been nice talking with you. I've enjoyed our conversation, and I've learned a lot from speaking with you. And I know my audience too, they are going to find this beneficial. Uh, as a parting thought, what would you like, to leave my audience with? And if you don't mind, you can also share how they can connect with you, follow you, and be in your domain.
Yeah. So I guess my parting words are have a budget. I right before this, I was on a call with someone, and that was one of my things. And she was, a brilliant young woman. And I said, well, have you done a budget? And she just sort of smiled at me. Have a budget. That's my parting words. Because again, you can't know where you're going unless you know where you've been. If financial planning is interesting to you, and you want to, sync up with me, I'm happy just to chat. And if I'm not the right fit, I always find people the right place to go. There are so many advisors out there that do different things. I have advisors that work hourly only. That's not my billing strategy, but I always believe that getting a person to the right place is the most important thing that I can do, even if it's not me. So again, I'm always happy to talk, with anyone who wants to improve things. So you can go to my website, wrpwealth.com, and click on, I think there's a contact us somewhere, and you can either schedule a time to talk to us directly, or you can shoot us an email. My email is arubin, ARUBIN, at wrpwealth.com.
There you have it. Thank you very much, Heron, for your time on the show today. We enjoy your insights, your wealth of knowledge that you've shared with us. Thank you.
All right. Thank you.